Namaste. Let us work out the next problem. PQ Limited has redeemable preference share capital of rupees 4 lakh in 5,000 preference shares of rupees 100 each, 80 paid. So first thing we should see how many preference shares are there. So there are 5,000 preference shares of rupees 100 each, 80 paid up. So it's very clear there is partly paid up shares. Okay, when there are partly paid up sheets, what we are supposed to do? First thing, we have to convert them into fully paid up sheets. So those two journal entries will appear. Okay. So while reading the problem itself, you have to visualize it, how it affects. It is resolved to redeem the shades at a premium of 20%. So what is this? Redeem. See, it is resolved to redeem. So redemption at a premium. So make a point. Just write it down there. Okay. So 5,000 preference shares of rupees 100 each. Then redemption at premium 20%. So the company makes the following issues: 25,000 equity shares of rupees 10 each at a premium of 50%. So here what does it say? Fresh issue of equity shares. So there are chances where the premium amount is more. When there is lot of demand for the share, definitely they can increase the premium. So don't get confused. It is not 5%. It is 50% itself. Okay. Then 1,000 10% debentures of rupees 100 each. So they are issuing shares as well as debentures. So we have to pass the entries for fresh issue. It comes here. Then the company has credit balance in the profit and loss account. So credit balance means what? In the profit and loss account, in the sense, in the balance sheet, the profit and loss account will be appearing on the liability side. So when the profit and loss account appears on the liability side, it is considered as profit. When PL account shows the balance in on the asset side, it is considered as loss. That you know, right? Now they are saying that credit balance. That means there is profit. How much? 1,50,000. And general reserve 2 lakh. So 1,50,000 and general reserve 2 lakh we have. So in case of shortage of funds, we can use that. Pass the journal entries. So first thing we have to write. So what exactly is given? Write the summary of the problem. Okay, then prepare the working note. Then we can pass the journal entries. First thing I told you, we have to redeem the preference shares. So preference capital we have to make the redemption, and redemption premium also we have to make the calculation, because the preference shares are redeemed at premium. Okay, so we have to return back the preference capital. What is the preference capital? 5,000 preference shares of rupees 100 each. That is 5 lakh, right? So don't take how much is paid up. So they have given 4 lakh. That is the amount that they had collected so far. We are supposed to return the whole amount, right? We can convert the partly paid up sheets into fully paid up sheets. Okay, but whatever amount is there, we have to return back. So entire share capital you have to see. So 5,000 preference shares of rupees 100 each. We have to take the full amount, not 80 rupees. Okay, so 5 lakh we have to return them back. So total amount required for redemption is 5 lakh to return the capital. Now fresh issue of shares. So we are making the fresh issue. 25,000 equity shares of rupees 10 each. 2 lakh 50,000. How much we require? Total 5 lakh we require. So out of 5 lakh, we collected 2 lakh 50,000 from the fresh issue of shares. Now, see, they have issued the debentures, but we are not supposed to use the debenture amount for the redemption of shares. You know, debenture holders are the creditors of the company. They will never allow to return the capital of another related party. So usually, okay, they have given issue of debentures. So let us pass the entry for issue of debentures. But for the redemption, we are not supposed to use debenture amount. Always remember this. Okay. Now there is shortage, right? So only 2,50,000 we have. Still 2,50,000 required. So we can take the remaining amount from the profit and loss account. So from the profit and loss account 1,50,000, from the general reserve 1 lakh. So total 5 lakh. So we require 5 lakh and we arranged rupees 5 lakh. Is it clear? Very simple. Here one thing you should remember, we should not take fresh issue of debentures for the redemption. Okay. Then premium. So redemption of, in the sense premium we have to give them in the event of redemption of preference shares. How to calculate premium? So 20% they said. In the problem itself they have given redeem the preference shares at 20% premium. So you should see what is the preference share capital. This is 5 lakh, right? So 5 lakh. On 5 lakh 20% you have to calculate. So it is 1 lakh. So total amount required for paying the premium on redemption, we require 1 lakh. Now, see, we have issued the shares at premium, right? That premium is considered as securities premium. So we can use the securities premium, in the sense we can use the premium which we got from the fresh issue of shares. So securities premium available. So we have issued, see, here you can see fresh issue of shares, 25,000 equity shares of rupees 10 each. So 25,000, 10, 50% is the premium. So 1,25,000 is the premium. So securities premium we have 1,25,000. How much we require? Only 1 lakh. So we can directly take 1 lakh from this. So we need not take from profit and loss account or other arrangements we need not make. So we have sufficient money, 1,25,000. So out of that we can use 1 lakh for paying the premium on redemption. Clear? So for every problem you do like this. If preference share is the redemption is done at par, don't write these entries. So redemption premium nil. You can write nil. Okay. Otherwise, follow the same thing. It is very easy for you. Okay. Then let us pass the journal entries. Always remember the step. First step is what? Converting the party paid up sheets into fully paid up sheets. How will you convert? You have to make the final call. So journal entries you have studied, right? Preference share final call account data to preference share capital account. Right? You're calling final call. From final call, in the sense you're transferring it to the preference capital account. So how much it is? See here in the problem, 5,000 preference shares of rupees 100 each, 80 paid. So remaining money 20 rupees, right? So 20 is the final call. So 5,000 into 20, that is 1 lakh. So we are using the same preference share final call account data to preference share capital account 1 lakh. Then we have to collect the money, right? Cash comes in. So that means what? We are selling our shares to the public. So we are selling the share capital and we are receiving the cash. So cash comes in, bank account debit, bank account debtor to preference share capital, preference share final call account, preference share final call account. From the final call we receive the money, right? So these are the two entries for the conversion. So first and second entry got over. Next step, fresh issue. That is, we are arranging the funds for the redemption of capital. Fresh issue. See, when we are issuing issue of equity shares, bank account debtor to equity share capital account to securities premium account. So in the previous videos I had discussed about this in detail. So we are receiving the money, we are selling the equity share capital and we are receiving the money, and we are issuing the equity shares at a premium. So security premium is a gain for us. Premium is a gain. So according to nominal account rule, all the income and gain should be credited, right? All the expenses and losses should be debited and all the income and gains should be credited. So we are writing on the credit side. So this is income. This is income. So bank account debtor to equity share capital account to securities premium account. Okay, this we have already calculated in the working note, 1,25,000. Total 3,75,000. Then fresh issue of debentures. See, when they are issuing the debentures, we have to write the entry. But we are not using the proceeds of that. We are not using that money to redeem the preference shares. Okay, let us issue bank account data to debentures, 10% debentures account, 1 lakh. So for fresh issue, there are two entries. Third, fourth, over. Next step is what? Arranging funds for redemption of premium. So here, from which account to which account? We are transferring some money from security premium account to redemption premium account. So we have got sufficient balance in the securities premium account. So securities premium account debtor to redemption premium account, or a premium on redemption of preference shares. You can write in that way also. Premium on redemption of preference shares account. So being redemption premium met. Okay. Next step. Creation of CRR as there is shortage of funds for the redemption. So I told you, always if there is sufficient balance, we need not create capital redemption reserve. So in the problem, see, we had worked out. See here. Actually, how much we collect? We want 5 lakh, but we have only 2,50,000 from the fresh issue. So we have shortage. When we have shortage, we can use the profit and loss account, right? From the previous profits, we can use the fund 1,50,000. Same thing here. Like from which accounts we are taking and transferring to which account? We are taking from profit and loss account 1,50,000. These are the shortage of funds. Okay. General reserve account debtor. From this, we are transferring to CRR account 2,50,000. Clear? So from which account to which account we are transferring? Okay. So now the amount is ready with us. The last step, that is final settlement, redemption of preference shares. So here also there are two entries. The first entry, amount due. So we have to transfer this to preference shareholders account. So what are we transferring? Preference share capital account debtor. Premium also we are transferring. Redemption premium on redemption of preference shares account debtor. You can write in that way also, to preference shareholders account. So we are transferring this much. We are transferring to shareholders. Then we have to pay them, make the payment. So who are the receiver of benefit? Preference shareholders. They should be debited. Preference shareholders account debtor to bank account. So total 6 lakh we have to pay. That's it. Clear?